Well, today has been a bad day for stock markets across the world, worst in about a couple of months, while bond yields have fallen. Very much a reversal of the recent trend. The main reason for that is concern that the fall in the oil price is going a little too far. Today we saw Brent drop below $66 a barrel and WTI drop below $63 a barrel. In both cases, those are now new post-2009 lows. If there was a trigger for that today, it came from Chinese trade data, which was very disappointing. In particular, imports fell for the last month. They have been expected to rise. If you look at this on a 12-month moving average basis, you can see that imports are basically flat this year as China is being relied upon as the consumer of last resort. This creates concern. You might helpfully say that people are now worried that this is a bad fall in the oil price prompted by weak demand rather than a good price fall prompted by strong supply. Now that's having an effect in other markets. It's creating winners and losers. If you want one very clear set of losers, it's energy stocks here in the US. What we're showing you here shows you how the energy sector as a whole has performed as the oil price has fallen. The most dramatic victims have been the oil drillers, down some 50% for the year. There are winners, most noticeably the transport sector. As you can see, they have radically outperformed the oil drillers, the energy sector. If you wanted to put on a beautiful trade to take advantage of lower oil prices back in the summer, this might have been the one. Go long oil transport companies, go short oil drillers, and you would have more than doubled your money inside 6 months. That would have been very nice. But perhaps the more important point, rather than kicking ourselves with hindsight for trades we didn't make, is to stand back from trades like this, from graphs like this. You could also point to things like the great outperformance that India is putting compared to Russia in general, the victories of oil importers over oil exporters. You take a step back, look at those and ask whether these trends really can continue. We are at a point now where there is some concern about exactly how such cheaper oil can be reconciled with the rest of the economy. That is why there's certainly no way we can call a turning point, but that is why we did see a bout of nerves about this today.